Hello and welcome back to Coinscrum Markets. I'm delighted to be joined today by Alessio Quaglini, CEO at Hex Trust out of Hong Kong, and Sean Lee, CEO at the Algorand Foundation, also based out in Hong Kong. Welcome, guys.
Thanks, Paul. Thanks for having us.
Well, thanks for joining us. We're based in the UK. We cover a lot of things in Europe and the US. From time to time, we've spoken to some people over in the APAC region. We thought it was time for an update to see what's been going on over there and look at how institutional adoption has been growing. Obviously, it's been a hot topic over the last few months generally. And I know you guys have been working together on some projects. And I think, where we're at now, we're seeing, the scale we're reaching that I guess jurisdictional arbitrage is going to come into play. We've got kind of different regulators across the world positioning themselves, which is generally positive. Things have slowed down in the UK. Europeans are making progress with their MiCA regulations. Things are becoming clearer in the US. But on the flip side, you've maybe got some more negative kind of murmurings from central bankers like Janet Yellen and Christine Lagarde. Reports last week that India have kind of flipped again and maybe looking to ban Bitcoin holdings. So I think this is going to be, over the next year or two, it's going to be interesting to see how different countries and regions position themselves to support this technology and support growth and support innovation. So it's something we're really keen to hear your perspective on today. First thing, can we just maybe get from your opinions on how things have kind of been evolving over the last year or so? Alessio, perhaps we can start with you. CEO at Hex Trust, a digital asset custodian and service provider. What are you seeing in terms of demand now and how that's changed over the last year?
Thanks, Paul. So firstly, Hex Trust, we only cover institutional clients. So my answers will be only related to this kind of category of clients. Over the past 12 months, we've seen an enormous increase in the demand from institutional clients. I think the demand was basically spread across the continent. Obviously, in our home market, Hong Kong and Singapore, we've seen institutional investors in corporations. We've seen banks and other financial institutions interested in entering the space in different ways. But I would say that the demand probably in the past 6 months has increased tenfold. And I would say that probably the main reasons behind the increase in the demand in the Asian continent is partially, as you were mentioning, the improved regulatory framework in some of the key regions. In Hong Kong, we can talk about it, in Singapore, Japan, Korea, but also in some countries in Southeast Asia. And at the same time, we've obviously seen the move of China with the BSN, the central bank digital currency, and we've seen coming more from the West, a lot of monetary printing, and at the same time, large corporations starting to buy digital currencies.
Okay, very cool. And Sean, from your perspective, slightly different angle, obviously developing technology, and we'll come on to the details and look more closely at the Algorand network itself soon. But obviously, one of your roles is building partnerships and relationships. And again, that narrative has changed quite a bit over the last few years, especially around, again, we'll come on to it soon, but around public and private blockchains and how that they're being received, especially by enterprise users. What have you seen over the last year or so in terms of how that narrative has changed?
Yeah, I would echo what Alessio has expressed so far. I mean, the interest in blockchain technology, in digital assets in general, have skyrocketed around the world, but especially in places like Asia, where you have many jurisdictions, many places where cross-border payments and settlements services are required, and using conventional kind of rails to support that has continued to be quite a challenge. So you are certainly seeing a large portion of the community really starting to look at blockchain-based technologies, especially using things like stable coins and others to facilitate some of those transactions. And you're starting to see adoption starting to grow quite a bit. Now, at the same time, you are seeing also with the geopolitical tension in some sense that are also playing out as well. And some of those are actually, coincidentally also representing itself in the crypto space, in the same time. Alessio mentioned BSN, which is the Blockchain Services Network, a major initiative that China has been driving as part of their Belt and Road Initiative. Now, you could call that a technology framework, or you could call that part of their larger kind of macroeconomic toolkit as part of the way for them to facilitate transaction, both from a data perspective, but also from a monetary perspective as well. So when you bring all of these things together, I think we are certainly seeing a lot of interest in the Asia Pacific region, along with the rest of the world, but Asia is certainly growing very quickly in that regard. And that's also one of the reasons why late last year, we actually ran an Algorand accelerator right here in the Southeast Asia region, so that we can tap into the developer network, we can tap into the startup community that are really trying to tackle these issues, and then also looking for partners to continue collaborating. So lots of activities, as Alessio mentioned. And I think we can touch upon this later on from a perception on a public and private blockchain perspective, but activity is definitely there.
Yeah, and how are you finding the regulators in terms of supporting businesses? Because I mean, from looking from afar again, everyone saw that Japan was very proactive in the early days, actually, and I think it's continued to be so. I guess China's its own beast, and a different place to have to navigate things. But obviously with some of the tensions going on in Hong Kong, and then maybe people looking at Singapore as well, and they're looking to kind of make strides themselves. How are you finding those engagements? Are they generally looking to support the industry?
Maybe Alessio, I'll take a quick stab first, and then you can chime in as well.
Sure.
I think from our perspective, let me use the word fascinating, right? There are so many countries with varying degrees of both understanding and appreciation in terms of this industry. And it is fascinating because they are almost monitoring each other, they're watching each other, and they're learning from each other. It is healthy, right? The fact that they're actually paying attention is a good thing, right? Mm-hmm. That means, mainstream adoption, I think, is around the corner. Now, does that bring more confusion for companies and partners that are trying to build a multinational kind of cross-border type of business? Absolutely. In some sense, policies like what they have in China, where they say blockchain is priority from a national perspective, but absolutely no crypto assets. Mm-hmm. Okay, that's not a bad thing. It's pretty clear, right? Mm-hmm. It's pretty clear where China stands. At the same time, does that preclude a lot of business opportunities in such a large market? Absolutely. Does that also mean opportunity for places like Hong Kong and Singapore, for us, where we have kind of that linkage and that hub, that financial hub kind of DNA in us, and be able to facilitate that? Perhaps. Mm-hmm. So I think it's going to play itself out. But I do appreciate the fact that we are seeing more, getting more attention from institutions and also from the regulators. And I think it's a very, very, very healthy thing.
Great.
Alessio?
Well, I mean, completely agree. I would just add that it's going to be very interesting to see how the regulators in the key international capital market centers actually move. Because that's where, obviously, the capitals are. And that's where the whole, if we're only talking about the financial world, that's where the main players in the traditional and in this new market actually are. Right. So I think we need to observe these key centers, and then I'm pretty sure that all the other regional centers will actually follow suit what these centers are doing. And we're seeing some discrepancies in their approach. So that concept of regulatory arbitrage that we mentioned before is going to be important, at least in the medium term. And companies like ours, we have to actually make sure that we have always a hedge in terms of where we operate and what kind of platforms we can offer to our clients in different jurisdictions. But at the same time, I think the important thing is that we're seeing progress somewhere slower, in other places a little bit faster in all the key capital market centers.
Yeah, and I guess in different niches, I guess within the industry, things will move at different speeds. There's been various amounts of interest around security tokens and things like this, and that really does come down to each jurisdiction having some or more of a regulatory cohesion, I guess, because those things will work best when there's some global standard. Otherwise, you've got different regulatory regimes kind of clashing with each other in that particular use case. But I guess once major regulators or kind of the sort of the leading regulators, one or two of them start taking a lead, hopefully the rest will follow and take their guidance. So we've spoken about this institutional adoption. Everyone's aware of it. One of the missing links prior to recent times was I think we'd all agree maybe the market infrastructure wasn't quite up to scratch to be able to support those type of actors. It was the whole industry emerged from a very retail focused kind of angle. So Alessio, can you just tell us a little bit more perhaps about Hex Trust, how your team kind of formed the project, and what it is you're building and developing?
Yeah, sure. I'll try to be as quick as possible. So Hex Trust was created at the beginning of 2018. It was founded by two ex-bankers, but with slightly different backgrounds. Myself, I'm an engineer, but I started my career working for the securities regulator, actually, in Italy. And then I moved to Asia, where I worked for different investment banks until I met my co-founder. Rafal, he's also an engineer, but he's been basically a financial markets technologist for over probably 25 years. In his last role, he was the CTO at CLSA, one of the largest brokerage houses in Asia and globally. And when we met, we had a very similar idea of how this market will actually evolve. So we thought that blockchain will play a significant role in the future financial markets infrastructure. So we thought, okay, right now it's mainly a retail, unregulated market, but eventually financial institutions will want to enter this space. And if and when they enter the space, they would need that kind of platforms that they use in the traditional financial markets. So the idea behind Hex Trust is really to provide those services and platforms that are necessary for financial institutions to enable digital assets and offer digital asset services to their clients. It took us 1.5 years to basically build the first version of our platform. We've been in the market since since the second half of 2019. Right now we have over 70 clients in Asia, Europe, and we have offices in Hong Kong and Singapore.
Okay, great. And I noticed, again, we'll come on to this, as I said, in a little bit, but I think one of the other changes in terms of sentiment over the last few years has been this kind of, when everyone was talking about kind of enterprise participation. It was, okay, this is all going to be on permission blockchains. They're not going to kind of touch any of this crazy public blockchain stuff. But I know that you do, that's an area that you're still engaged with, and there is still progress being made on some of those private consortium solutions that are out there, and we're probably seeing a merger of the two worlds. Is that an area that you're seeing much demand on as well? And that's an area that you support?
I mean, we believe that, blockchains, there's not going to be one blockchain that will cover all the use cases around the world, right? So there will be different blockchains with very specific use cases, right? So some use cases will require public blockchains. Other use cases will require more permission blockchains, right? So I don't really see the two worlds as very separate. I think right now, and the technology doesn't have to be necessarily very different, right? It can be the same technology that can be applied to a public and a permission blockchain. The interesting thing is going to happen when you will be able to combine the two things and actually connect directly via some kind of blockchain bridge the public blockchain to the private blockchain. Right? Then we will see a seamless interconnectivity between the two worlds and the different use cases, and the two things will basically converge to the same market infrastructure.
Okay, so moving on to you, Sean, talking about Algorand specifically now. We've seen since Ethereum launched as the kind of first smart contracting network a few years ago now, obviously benefited from a massive first mover advantage, managed to build up a very strong developer community, but it's not been without issues. It's had its own scaling issues, which have been well documented. And we have seen a number of new networks launch with new designs, I guess with the benefit of having visibility of some of the mistakes that might be made with the initial design of Ethereum and looking to address those problems, especially around scalability and things like that. Could you just give us a high-level overview of the Algorand network and what are some of the key features are which differentiate it from some of these other networks and challenges to Ethereum?
Yeah, certainly. I'll do that, and I'll also kind of piggyback on some of what Alessio was talking about in terms of the bridging between the public and the private side as well. As you may know, the Algorand project was started by our founder, Silvio Micali, who's a Turing Award winner, world-renowned cryptographer out of MIT. And the project was started because he was looking really at a lot of real-world problems and trying to see whether existing blockchain technology can solve those, or whether there are sufficient improvements that can be done, building on top of a lot of the common principles, but then advance beyond them. And the Algorand project, or the Algorand blockchain, was really as a design of many years of research that him and his team have done that have been actually put in practice. So our blockchain was actually launched on mainnet in June 2019, so you could call it a relatively late comer. But we have certainly been developing very, very quickly on top of it, both from a technology perspective and also from an adoption perspective. Let me talk a little bit about the adoption first, because I think, however great the technology is, if there are no usage, then it's not that useful, right? So from an adoption perspective, you can go on our various different block explorers, and you can already see that there are over a million transactions on a daily basis and rapidly growing, right? And a lot of these, actually almost all of them, are real, actual economic activities. They're supported by various different partner projects. Some of them are in the IoT environmental space. Some of them are in the loyalty point space, the micropayment space. And we're starting to also see some micro transactions around equities trading as well. So a variety of different things that are happening on the Algorand blockchain. And of course, with our support of the various different stablecoins, especially USDC and USDT, now available on Algorand and also made available from various major exchanges as well. A lot of those transactions are going to be bringing a lot of activities and volume onto the Algorand blockchain. Now, what does that really mean? That means we're now starting to be recognized as one of the chains that not only have the technical capability, but actually have the room to grow, right? So when Silvio designed the system, on day one when we launched, we were already able to support 1,000 transactions a second, with finality of under 5 seconds. And that has been very consistent throughout the last year and a half, almost 2 years now, since we have launched. Now, the finality aspect is quite important because you can actually transfer from wallet to wallet, but if it's not finalized and you require multiple blocks to be written before that's done, in the real world transaction use case, especially when you're talking about kind of institutional grade, those type of network throughputs, then it becomes very difficult to do. So from day one, we've always been focused on not only the speed of producing the block, but also more importantly, finalizing the block. So what we're moving into now, as we continue to evolve our technology, and Silvio has actually recently published a technology update blog, we're now moving into 46,000 transactions per second, right? With a finality of close to 2 seconds. Now that's a dramatic increase. If you do the math, that's your Visa, MasterCard type of speed, right? And that's the type of volume that we're looking at. Now, does that mean we're going to have lots of use cases immediately being able to utilize that capability? Not yet. that's really where our partner companies, Hex Trust, for example, we're working on together to identify those use cases and make the toolkit available for others to continue to build on top of it. And that's what we're really focusing on here.
Okay. And yeah, I mean, and what sort of, I mean, that's an incredible amount of throughput there. And what sort of average transaction fees are you seeing with that type of the current throughput, and what that would look like potentially if you did scale up?
Right. So, it's a funny thing, right? Our transaction fee built into our layer 1 protocol is for every transaction is 0.001 algo. So obviously that depends on the price of the algo, and certainly the whole market has been trending up the last couple of months. But at 0.001, when you're transferring things like stablecoin, for example, the transaction fee is near minimal. Right. It's nearly negligible, and that's why we've got these exchanges that are very excited to work with us on onboarding USDC and USDT, as well as the Canadian stablecoin dollar, the euro, the Brazilian real, and then so on and so forth. We've got a pipeline of those coming on board. And if you can almost think about it, we're starting to now facilitate an environment where we can have crypto assets, our crypto native asset, the algo, as well as others that may be wrapped, as well as these more stable coin type of assets, all transacting on the network. Mm-hmm. And then we're trying to make those toolkits and the facilities and some of the dApps that are available to make use of that infrastructure and make use of those assets. And then, of course, in time we're looking at the NFTs as well. So there's a number of things that are happening that are really powered by the genesis of the capability that the platform offers. But that will take time to play out, and we're kind of certainly very excited to see where things are going at the moment.
Okay, great. I mean, so that the kind of increased throughput is critical. As the more kind of enterprise audience enters the space, and they need additional assurances that might have been overlooked by the retail crowd, and security is a major issue. Plus, we do have all these different networks, and with different nuanced approaches as well to what they're doing and how they're addressing some of these problems. Alessio, how educated are you finding your kind of new client base is in terms of the differences with these networks, and as they start being utilized as hoped, and smart contracts become much more relevant on these public networks, there's security risks that we know around smart contracts as well. Maybe we'll come back to that with Sean shortly. So what's your take on that? Your clients just looking to get exposure now, or are they taking a deeper dive and getting a real understanding of these networks?
Okay, this is a very complex question, because I think it really varies depending on the type of client that we're talking about. So to simplify, if we divide our client base into 3 categories, so we have the kind of digital asset natives. So for example, exchanges, brokers, token projects, etc. So obviously, this type of client, they're very aware of the different technologies and how to work, the risks, and all of the characteristics of the different networks. Then we have in the middle more traditional financial institutions, and this type of client was quite, I would say, illiterate until a few months ago. But I would say that I have seen a steep increase in the learning curve. And actually, if you'd be surprised that if you talk to a traditional bank right now, you talk to their blockchain team, you would realize that they have been learning a lot, mm-hmm. and the level of understanding of blockchain has increased dramatically. Yeah. Then the last category of clients is more corporate clients, or the more type of family office kind of worth individuals. But for this type of clients, the type of understanding of blockchain is quite irrelevant, because it's more about kind of investment. Mm-hmm. So diversifying their portfolio, not providing. It's not providing a digital asset service to their own clients, but it's more their own investment. So it's basically a progressive entry into this market, starting from Bitcoin, then maybe purchasing, diversifying away with some Ethereum, and then looking at progressively at the other blockchains, but from an investment perspective.
Right.
Have I answered your question?
No, absolutely. Yeah. I mean, back to you, Sean, on that though, because, I guess it was Ethereum's big picture at the beginning that would have these fully expressive Turing complete smart contracts on one side. You can argue that Bitcoin has some level of smart contracting with its very kind of bounded scripting language, which is kind of taking security to the other extreme. We can't deny the fact that there have been and there will continue to be smart contract hacks. And this is a risk in terms of building trust and confidence in using these networks at a larger scale. What's Algorand's approach to this been, and how are you addressing some of these risks?
Our approach is quite simple. When we design the layer one protocol, we try to have as much primitive built right into layer one as much as possible. There's the two reasons for that. One is when things are built in layer one as primitives, they're much easier to deploy, design, and also to implement. The second reason is when they're easier to deploy and design, then naturally they become more secure, right? Because you don't have as much variances that could be programmatic error, bugs, and otherwise that could potentially bring more risk into the smart contract itself. So the way we look at it is that when these smart contracts are basically layer one primitives, it makes them easier to analyze as well, right? So now that doesn't preclude the requirement from proper audits from experts, but the reality is if the security aspects and the auditability aspects of these layer one smart contracts are easier to analyze, then naturally our partners are certainly finding it a lot easier to build and deploy in a much more timely manner than perhaps some of the more generation one technologies that are out there, right? The other thing to keep in mind also is we are continuing to work with our various different partners to potentially layer on top of that, right? To make things even easier by providing various different toolkits, SDKs and whatnot, a higher level language, so to speak, right? That allows to kind of easily write dApps on Algorand and to interact directly with these layer one primitives. So that's kind of the approach that we take, is to use the simplicity to drive out the security concerns and any of the potential bugs that might be in place.
Yeah, and I guess maybe again don't want to denigrate Ethereum, but again, second movers do have some level of advantage of being able to learn from some of their mistakes in terms of design. And I guess it's everyone's objective that these are built for mass adoption for financial services in the future. And we touched on this earlier around, the narrative or the sentiment a few years ago was, well, it's going to be two separate worlds of enterprises are just going to have their permission blockchains. And then, the crazy kids can carry on and do what they want on the public side. With that in mind, when you started the projects and started the design, what were the other kind of critical features that you thought, right, if there's going to be that mass adoption for financial services and payments in general, that you really need to think about that others might not have done? I know that something like atomic swaps is something that you've kind of built in as well.
Right. So I think there are probably two major factors that we built into the layer one, as well as I'll talk a little bit about the coaching plan that we have as well, kind of bridging between the public and the private blockchain. So if you look at this notion of creating an ASA, so that's an Algorand standard asset. You can think about that like an ERC equivalent on the Ethereum side. When we designed the baseline protocol, we wanted to make sure that it appears that it's sitting on layer one, and it enjoys all of the benefits and the scalability and the security of all of our layer one capability as well, right? So all of our ASAs essentially behave the exact same way as our crypto native, our native token, the algo. So that means what we talked about earlier, all the stable coins that are minted as ASAs on Algorand will behave the exact same way as the algo. So that obviously brings a lot of advantages, both from a speed and scalability perspective, but more importantly, also from a cost perspective as well, that we kind of touched upon earlier. So that becomes an interesting aspect, and we are seeing lots and lots of adoption in folks that are kind of tokenizing various different assets using the ASA structure on Algorand. So that's one aspect. The other aspect is the notion of atomic swap, right? If we give an example, if I give you, $10 and you give me 10 USDT, what happens first? Like, do I give it to you first, or do you give it to me first? How are we able to do that simultaneously? And not only are we doing a one-to-one, how do we do a many-to-many, one-to-many, many-to-many, right? How do we ensure we're able to group all of these transactions together, and when all the conditions are met, then the execution happens and it's written on chain and everyone gets immediate. And remember, our finality of under 5 seconds, everybody will get those transactions done under that time as well. Mm-hmm. And that's really the premise of what we built into the atomic swap, to allow for that capability to happen. And that opens up a lot of various different business applications that could be quite applicable to it, both from a payment perspective, a settlement perspective, what we talked about before, and also some of the DeFi use cases as well. So those are kind of the two core capabilities that we built right into layer one, along with all of the other capabilities and smart contracts and whatnot, that we're seeing a lot of partners kind of building on top as foundational pillars. Mm-hmm. Let me also touch a little bit upon the co-chain idea. So the co-chain is this notion where Algorand is a public chain. We were built as a public chain. We were built so that we have no forking whatsoever that will ever happen on the Algorand blockchain, and that's why we can guarantee that finality. But there are going to be cases where we work with institutions, private institutions, and/or governments, where a permissioned version of the blockchain may become useful. Mm-hmm. And that's really where the notion of a co-chain happens, right? The co-chains will be private permission chains that are hanging off that single main public chain, thereby serving various different use cases, but still having this network of connectivity and bridges that allow for various different assets and transactions to go from one area, from one area of the chain to the other. That is certainly something that we're building towards. In fact, if you think about our partnership with BSN that we mentioned before, our implementation in mainland China for BSN is going to be one version of this co-chain. Because obviously in China, only permission chains are allowed. No crypto assets are being traded upon. So there's some variation that needs to be changed. So from an architecture perspective, a co-chain architecture is very much what we're going to be implementing for that particular use case. But it's going to be the same thing as we continue to work with other governments on CBDC use cases, as well as various different financial institutions as well.
Yeah, great. So, you mentioned DeFi there briefly, and it's been an area of growth over the last year. I don't think anyone could have escaped that. Again, all very interesting, very raw still in many ways. Definitely room for improvement, but we know how these things start and then evolve. But again, from the investor's standpoint, and possibly for some of your typical clients, Alessio, we've now seen, especially with networks such as Algorand and moving to proof of stake consensus models, yield generation, yield bearing opportunities have become quite a hot topic, and probably in the current economic environment, quite attractive to new institutional investors coming in. Again, not without risks of kind of your principal could be highly volatile, so you have to kind of weigh that against the potential rewards. But again, it's something which is attracting attention, both on the staking side and on this broader DeFi kind of narrative as well. So Alessio, what are you doing in terms of building your infrastructure to support these features and these opportunities for your customers?
Yeah. So our objective at Hex Trust is to build not only a custody platform in the sense of safekeeping the assets, but it's basically creating a comprehensive treasury management solution, right? And when I say treasury management, it basically means to allow our clients to lend, to borrow, to stake, and do other similar transactions with other intermediaries in the market. Now, what this means, the complication now in the blockchain world is that obviously you don't have any more just centralized intermediaries that you can interface with to do lending and borrowing. But you have the option to do the same thing either in a centralized manner or via the DeFi protocols. Mm-hmm. Now, at the same time, you have to evaluate the possibility of leveraging a number of different DeFi protocols and evaluating them before exposing your clients to the risk of each smart contract. So for us, basically, we decided to structure the platform in a way that our clients basically have access to both the CeFi world and the DeFi world. So if they want to lend their funds to generate yield, they can use the main centralized players. Mm-hmm. But if they want to generate yield by lending their funds via Aave, they can do so from a custody wallet directly integrated within the same enterprise-grade platform. Mm-hmm. Staking, we have already enabled staking for a number of protocols that we support, and I think it's going to be a major kind of stream of development for us. And we have some announcements coming very soon to the market with regards to how we are seeing the development of staking in a treasury management platform going forward.
Okay, very interesting. So we'll look forward to hearing more about that when the news comes out. So Sean, I mean, it's been great to hear both of your perspectives, covering slightly different niches here. How you guys how have you guys started working together, and what opportunities do you see in forming such relationships?
Yeah, well, it's been a wonderful partnership and on multiple fronts. Obviously, as a recognized player in the custodian space, we were very interested in working with Hex Trust in providing support for our native token, the Algo. But more importantly, as I mentioned before, the various different ASAs, the Algorand standard assets that our partners are building on top as well. So that's been the primary areas of integration in terms of the partnership that we have between our organizations. But then, of course, as Alessio mentioned before, as Hex Trust continue to offer new products and services, potentially we could also be one of those in collaboration as well. That's certainly something that we're in discussion with, and I can foresee in the near to medium term, we're going to be exploring quite a few of those moving forward. I just like to add also, aside from a business perspective, a few weeks ago we held a hackathon here with 5 major universities here in Hong Kong, and Alessio and the Hex Trust team was kind enough to participate as part of our panelists to share some of the insights that he has within the industry, but also more importantly, kind of give the next generation of blockchain developers this notion of the industry in terms of growth and potential, and also to nurture the next generation of talent as well. So, we very much appreciate that, and we will continue to look forward to many more collaboration in that regard, aside from all of the business partnership that we'll be focusing on.
That's great. And Alessio, have you got anything to say about the partnership?
I think obviously we're very proud to be a partner of Algorand. There are many players in this industry, right? But I think I value 3 things the most about Algorand and the work that they're doing. So firstly, obviously having a solid technology is key, right, to be a leading player in this industry. The second one is having a really clear focus on which part of the market. And going back to what I was mentioning before, there will be different blockchains for different use cases, right? And it's important to have a clear focus on which use cases your blockchain is going to solve and address, yeah? And the third one, I think the work that they're doing is very good in terms of going back to the hackathon and creating this community. Blockchain is all about creating the community, creating the adoption around a technology, a protocol, and it's very important to build this kind of attention and group of people that work together from different industries and from different types of backgrounds around one single project. And this is what makes the difference between projects that do not have this kind of community perspective and projects such as Algorand.
Yeah, no, absolutely agree. It seems to have been one of the most critical factors. Goes hand in hand with how good the technology is. If you don't have people using it, it's not going very far. So it's critical to any project. I'm just conscious that we're nearly up on time. So just before we go, could you both just tell us a little bit more about what's on your roadmaps over the next 6 to 12 months that people should be keeping an eye out for? Sean?
Certainly. I guess we'll talk about it in kind of three manners. One is one that we already talked about, kind of the technical upgrades that we'll be making onto the network, going to 46,000 transactions a second, 2-second finality, and some of the additional capabilities. So we'll cover that. We covered that earlier already. The other aspect is this notion of we are a decentralized public blockchain. And part of our efforts is really to start to really continue to improve upon that. And in the coming months, we're going to be announcing the release of our governance program, where we're moving into this notion where we want to work with our partners in our community, where they show commitment into the network, but also have a say and have a very strong say in terms of the direction, in terms of where the Algorand technology is going, where the ecosystem is going, and also potentially where some of the funding resources are going to be coming from as well. So we really want to make this a ecosystem-driven project, right? The major decisions are decided by the community. We are going to design things together. The foundation on our side, we're going to be playing more of the facilitator role, but the decisions are going to be made together for the benefit of the ecosystem and the direction where we're going. So that would be the second aspect. The third aspect is kind of piggyback on what Alessio was talking about before. For a public blockchain like ours, adoption is very important. So we're focusing on two major areas. One is look within our ecosystem map, so to speak, identify areas where we can continue to improve upon, where we need to find partners to proactively build things onto Algorand to create that consortium and build that synergy between various different applications. That's one area we're going towards. And then at the same time, from an adoption perspective, we're going to double down on the education aspect. So we've already got partnerships with the likes of UC Berkeley, UC Davis, Imperial College, and working with them on both from a education curriculum perspective, but then also tap into the research facilities and the research faculties, and in terms of doing some research in some of these more cryptographic areas, blockchain technologies, CBDCs, private Cs. So you're going to be seeing a number of those being announced over the next couple of months on joint collaborations where we're funding our resources into working with these leading institutions to drive home that grassroots level developer, students, and education level side of adoption as well. So that's what we're going to be working on throughout 2021 and moving forward as well.
That's great. Thank you. And Alessio, what about you and the team?
So I think we have three main streams of development for 2021. So the first one, as I was mentioning before, it's really about completing this treasury management solution that allows you to basically, apart from safekeeping the assets, but also generate yield, stake, etc. The second one is the support for securities tokens, which I think we are almost there in terms of, everybody has been waiting for securities tokens for a long time, but I think the regulatory frameworks are almost there, the technology is there. So we will see some kind of developments this year, and we want to be very well positioned for this. And the third one, I think we were the first custodian to announce the support for NFTs. It was a very timely announcement. Obviously, that market is going to, apart from the temperature of the market right now, I think is going to actually become quite large, and we will invest quite a bit of resources in supporting that kind of market from a custody perspective. Apart from these three streams of development, we have two big announcements in the next 2 to 4 weeks. So one is with respect to fundraising, which we will disclose next week, and then we have a big licensing announcement coming quite shortly.
Okay, well, we offer you advance congratulations on those when the announcements are made. And I was going to say, I just realized I thought we'd got through the whole interview and hadn't mentioned NFTs, so I'm glad that you got it in there at the end. But again, another fascinating area, early days, but that's going to be part of the story going forward. So we can maybe come back and talk about that as another subject in the future. But guys, look, really appreciate you joining us today. Fascinating to hear how things are developing over in your region, and we'd love to have you back again soon. So hope to see you again. Thanks.
Great. Thanks for having us.
Thanks for having us, Paul. Thanks.